Hey traders from around the world, what's going on? It's me, Jeremy Alexander Newsome with the one, the only, reallifetrading.com. Hope you're doing absolutely wonderful. It is indeed Wednesday. Here's the SPY, which is the S&P ETF, and today we got a little bit of a high wave candle. So let me just kind of open up what I mentioned and kind of publish this in TradingView of the day. If you don't follow us on TradingView, make sure to do that. Second thing, if you have a Facebook, make sure to go to it and type in real life trading and then click the like button if you don't mind. That would be incredible. So here's real life trading, www.facebook.com/real life trading, and come over here and click the like button if you don't mind. You can see that I've already done it. I was number one. So anyway, if you have a Facebook, that'd be great. I would appreciate it. We're still a small company trying to grow, trying to enrich lives all over the world. Anyway, on SPY, I posted the other day that this is kind of what I think happens. I posted this yesterday, and this is my thoughts on the SPY. And I think we're going to kind of form a little bit of a pennant pattern of sorts, something that looks a little bit like this, and then potentially roll down, more than likely. So the last time we talked was on Monday, and on Monday, you remember I had this little bracket trade right here, and I was basing that on the hourly time frame. So I'm coming here on the hourly time frame. So on Monday at close, this is what the market looked like. And I mentioned if we rolled over here, then we could get in bearish. If you did take a bearish entry, at that day when it broke below, that's totally fine. You're definitely not losing on that position. You probably already have exited for a small gain. I didn't trigger in because it gapped down that day, so I did not trigger in on a swing trade on that particular setup. So what I'm expecting at this point in time is potentially and likely a little bit of a bounce on the SPY back up to about 216. Maybe, maybe not. Doesn't have to happen. But if it does, keyword if it does, and we roll over from here, then I'll be looking to play the SPY bearish around the 216 area. Now, this morning and yesterday afternoon, did buy some calls on the SPY because, well, we were at this support level, right? And we bounced there once, so why not? So bought some calls yesterday afternoon. We popped and no kidding, exited right about there, about 3 cents from the high of the day. Pretty lucky using a fib. But anyway, exited at the SPY, comfortable and happy with about a 35% gain on some of those calls. Just a really quick little play that I did on the SPY. So at this point on the daily chart, we're in that pennant pattern. I do think there's a good chance to bounce a little bit tomorrow. And bottom line, if we break out of here bearish, I do think we trade into the 210, maybe even the 208 area. And then from there, we'll see. I plan on buying the bounce if and when it happens. But for right now, I'm just keeping an eye on SPY to either bounce and then I'll short on a rollover. I'll consider playing that bullish on the bounce as a very quick, aggressive trade when I might be in a few hours if on the bullish play. And then again, on a bearish play, if it closes below here tomorrow, I'll look to short a very tiny retest. And again, look forward to trade down lower. So that's the SPY. Here's the Qs. Qs actually look relatively bullish. So here's kind of my plan on the Qs. You can see this 116.55 entry. Here's your hourly chart. And your hourly time frame, you can see for sure a lot of resistance right here, increasing line like that. So if we trade up in here and pop out of there, that's going to be actually a decent little break. So I'm considering buying to open September week for our 117 calls, 83-cent limit, stop at 25 cents on the calls. So here's your daily chart on the Qs. And it's a really big deal if we break Friday's high, because again, Friday was a pretty nice little bearish gap. So if we break out of that, today was a new white soldier on the Qs, so I think there's a little bit of a bullish possibility out there. Let's talk about some trades, shall we? Got to give a shout out to my buddy Doug. He's a new real life trader. And Doug on Monday scorched PRGO on a bullish gap and go for a day trade. So Doug, great trade, man. Proud of you. I forget how much he made, but I think he was trading options, if I'm not mistaken. I think he made like 30 or 40%, something like that on a day trade. The 100 simple moving average was his target. I think that was a really good play. So secondly, Doug, if PRGO did have a nice gap, if it trades sideways and closes above 97.52, I would be more bullish than bearish on ticker symbol PRGO, which I thought was the sparkling water at one point, but apparently it's not. Here's HYB. My buddy Kevin was asking about this one. He's also a new real life trader. This is New American High Income. And the volume, a little bit light on this trade, so I definitely would not be trading options. I don't even think it is optionable. Only 8,000 shares on average. But what I'm looking at is I definitely see, in my opinion, some nice higher lows and higher highs here. Pretty good looking trend. And HYB just traded back to the 100 simple moving average. So I think the risk reward on this one, Kevin, looks good. Entry would be really a bounce off the 100, so about 883, and the stop would be approximately right about here at 872. So kind of about 10 cents of risk. It's a pretty tight little aggressive trade right there. But hey, if it bounced off the 100, risk reward is definitely there. The trend looks good, and hopefully that one will work out for you. Brian was wanting me to look at TTWO, Take Two Interactive. He was mentioning a lot of the new software they're coming out with, and all the some of the other games they're coming out with. Take Two Interactive, if I take you guys to a monthly chart, you'll see something very interesting. It's been a very, very strong move since 750, and it just absolutely ripped through the highs of $29. So at this point, I do see a very strong bullish trend, either a 1-2 wave 3, or you could see a 1-2 wave 3. I think we're in a 3 of 3, which means I'd be very, very cautious buying here for a longer term trade. What I mean by longer term trade is really in this situation, anything more than a few months on Take Two Interactive. If you're looking at playing it bullish, I'd be very short term because I do want and expect a very nice little pullback. So if I'm looking at it, this looks like a Morningstar reversal pattern to me. Nice little resistance right about there, and it does appear that it's still in a bullish trend. I would just be personally kind of cautious on it because it's very, very high. It's been trading up. It's been absolutely wrecking it. It doesn't mean that we can't do this and then bounce, right? That would be a much more a more opportunistic purchasing location if we traded back down that far, because that would be a discount, right? I mean, $44 to about $38. That's $6 on a $44 stock. So it's about 15% retracement price-wise. So on Take Two Interactive, if you're looking at playing it bullish, that's absolutely fine. The trend is unequivocally bullish. Just keep a close eye on it and be quick about it. So this little resistance right here, stop could be here. Maybe buy a pullback into that level, look for it to bounce, and then target 1. And right there, that little setup is a 1-to-2 risk-reward ratio. So if I'm playing it bullish, I'm quick in and out, and then I'm waiting for a longer-term pullback if we're planning on taking this trade long-term. Here's TLT, which is getting absolutely shredded recently. TLT, here's a kind of a decent bracket trade that would have worked out as of yesterday being Tuesday. Mentioned this little small black candle on the 100, and I had a trigger, bullish trigger, for an aggressive bounce or a day trade if it broke above 136.27. Obviously, that never happened. You got a white candle yesterday, so a trader would have moved the stop down to here, and then once it broke below that stop, which was 135.05, we actually started moving bearish. So TLT, aka the Treasury Bond ETF, in my opinion, looks like the next move is to the 200. This is a retest gap. Allow it to retest a little bit more, and you could probably flip the script. You could probably flip these trades around, have a bearish entry like this, stop like that, and let this trade down to the 200, which would be a 1-to-2 risk-reward ratio. Gold, ticker symbol GLD. I wonder where the gold's at. Show me the gold. Here's gold trading sideways. Nothing to report on gold. It is honestly just really hanging out for the past few months. I do kind of see a little bit of a pattern like this. And personally on gold and silver, I would love to get an opportunity like that to either buy that dip if this breaks down. I don't know if that will happen, but it most certainly could. Here's silver, SLV, and oops. So you'll notice on silver, I have here a limit buy at 17.15, kind of similar triple top pattern. And there's definitely some peaks up there that are causing it to slow down. And I'm looking for, at some point, silver to pull back and bounce off the 17.15 limit buy area. Also, more or less that 100 simple moving average. So a lot of traders have been trading silver. They're happy to be out. They're happy to be profitable. And that's pretty much about it on silver. So silver and gold, don't worry having positions on them right now. Just kind of both waiting a little bit more for some pullbacks to occur on those. Twitter, TWTR. Twitter, we have a little bit of a potential Morningstar reversal on Twitter. I mentioned not too long ago that I think this was in a 1, 2, 3, 4, 5 wave count. So 1, 2, 3, 4, 5, A, B, C. And as far as the wave count goes, that's really sufficient because the C wave did make a lower low than the A wave. And if that happens, and that really is all that needs to happen for that wave count to have played out. So today is a nice new white soldier candle off of the 200 simple moving average. I think at this point I could probably delete this and just simply say, if we close above the upper shadow today's candle, believe it or not, I'd be remotely more bullish than bearish on Twitter. Here's the stop, would be about 1741, and that's what I have on ticker symbol TWTR. Apple. Yesterday was Tech Giant Tuesday in Apple, and we posted this bracket trade yesterday afternoon and had a 108.87 trigger and a 107.20 for a bearish trade. I actually thought this trade would go bearish. Really want to know, but you set both of them up, right? Because you don't really know. I think Apple is bouncing here because a lot of the negative news stories on the Samsung 7, apparently they've been exploding on airplanes, and blowing up phones cannot do any company any good. So I think Apple's getting a really good positive response from that. Plus, I think it's a 1, 2, 3, 4, 5 wave count, this being the 5th wave. So volume coming in like crazy. This put sale for stand will expire worthless. Got to give a shout out to my buddy Ron. Check this message out. Ron said, yesterday sold a 104 October expiration, put sale, and was already up 50%. Good job, Ron, man. That's great. Love it, love it, love it. So that one's already up. So again, that's trigger, this intraday trigger, triggered this morning and already traded to the target. It was one of those swing trades that turned into a day trade. The target was the 100 simple moving average on a weekly chart. For those of you who have shares, you could consider a 120 covered call for October. This is a really strong resistance on Apple. Would not be surprised if it moves. I'm one of the few people out there who mentioned that I think Apple's going to be $150 stock in the next year. I do think it could bounce violently out of this area, and I'm excited for that to happen if it happens. If I just hide everything other than these averages, we, of course, could get this, but notice there's your double bottom. There's a close of the neckline. There's a pseudo retest right here. You got these lower highs, and these lower highs are starting to break down right now. You got these level like this. So if it rotates back down and bounces, great. If not, if it breaks out of here, I mean, Apple really, really, really could move. So keep your eyes on that. Matt DeLong, Sean Bennett, great job on your Apple 110 September calls. And yeah, we racked this one today on Apple. Really, really good move. We set that trade up yesterday in the afternoon swing trading floor. So that is Apple. Got to give a shout out to my buddy Zane, who scored himself a nice R on Cracker Barrel. Good trade, Mr. Zane. This was a beautiful bearish gap and go. And there was your support. There was your white candle. There's the bearish gap all day, every day. That's one to be watching. And Zane did a very good job of trading it bearish. Awesome stuff, brother. And one more. Here's Amazon, AMZM. My buddy Linderman noticed a very interesting similarity. I'm just going to make it a very, very quick similarity. For those of you who track Amazon often, look at this candle and this wave pattern and this gap and everything back on December of last year, and look what we have right now. All-time high, white candle, small evening star reversal pattern, small evening star reversal pattern. Woo, it's interesting. So there are some similarities there. My buddy Niels has a 720 put sale expiring this Friday, and like Amazon to pull back to the 100 and then bounce. Nice little pennant, just like anything else. If it breaks bearish, it should break. One more. Got to give a shout out to my buddy who is visiting from Austin, Mr. Vinny Patel. Vinny had some calls on Netflix. He bought October calls back in this range somewhere, and let's just say he had more than one option on it, and he made an absolute killing. He exited that trade for a nice profit while we're eating lunch together. So Vinny, great trade, man. Well done. He didn't exit when I exited and told me I should have called him and told him to exit there. I said, hey, man, I texted you. So that should be good enough, right? But anyway, he made a really good trade on that one. Vinny, great job, dude. Dean's got a covered call expiring this Friday. Stan's got a covered call expiring this Friday. Ray's got a put sale expiring this Friday. And Neil's got a put sale expiring next Friday. I love it. Netflix trading sideways between the 100 and 200 simple moving averages. At some point, that bad boy is going to break out. Maybe on earnings, I'll be keeping an eye on it. But ladies and gentlemen, you'll hear it here first when it happens. Thanks so much for watching this Wednesday Real Life Stock Review. Keep your eyes on your inbox tomorrow, sending out a very important email. And the next Real Life Stock Review will be on Friday. And until then, remember, love life, live life, and trade. See you.